Good morning, everybody. It's Wednesday, January 8th, 5:26 a.m. Central Time. Grain markets are mixed this morning. March corn futures down a quarter cent at 457 and three quarters. March soybeans up 3.5 at $10 and three quarters. March Chicago wheat down 2 at 540 and a half. March Kansas City wheat down 2 1/4 at 553 and a half. March spring wheat is down 2 at 592 and three quarters. Instead of starting off on LaSalle Street, let's start off on Wall Street this morning. What happened yesterday?
The stock market tumbled on Tuesday amid concerns of a potential resurgence of inflation. The Dow Jones lost 0.4%, the S&P 500 declined by 1.1%, and the Nasdaq fell 1.9%. The economy's ongoing resilience has delayed expectations for when the Fed will make its first interest rate cut this year. The Labor Department reported yesterday that job openings unexpectedly increased in November. Another report revealed that the services sector activity grew in December, but the cost of inputs reached a 2-year high. There are also concerns that President-elect Donald Trump's tariff plans may cause inflation to rise.
There are inflation or reinflation fears, and then also fears, I guess, maybe along the same lines that the deportation policy, the tariff policy, that stuff is inflationary. Yet Trump was chirping again yesterday, indicating that interest rates are far too high. Now, the president does not have a direct role in determining interest rates, but he does have influence. The president gets to make Fed appointments, and he can influence policy that way. Any of Trump's economic policies could kind of force the Fed's hand into moving interest rates one way or the other. I know you guys aren't overly concerned about the stock market. It has corrected lower just a little bit. We're still up even this year to date. One thing about CPI and inflation that's interesting to me and has been throughout this whole thing is I don't know if there is a comparison, but when you look at the inflation that happened in the 70s and in the early 80s, it wasn't like straight up and straight down and it never went up again. It went up and then came back down several times through that period. And I can't help but wonder if that's something that could happen again. We had the big spike following COVID and we came straight back down. If you were to see a repeat, this is not a prediction, but if you were to see a repeat of some of that stuff that happened in the early 70s or 70s through the early 80s, you could see a resurgence in inflation. And what does that mean for the grain markets? I mean, accuse me of a chart crime, if you will, for this chart, but I've got corn, soybeans, and wheat combined, and then I've got US CPI overlaid here. So there is some correlation, I think. And if you were to run into an event where large money managers believed that you have serious inflation coming back and the CPI number starts to tick up, even without a fundamental story in the grains, I think you could see some money flow into the grains and other commodities just because, a lot of the stuff that happened in 21 and 22, there was some fundamental reason for a lot of that. We had better demand. We had some weather markets. We had Russia, Ukraine. But I think that it could force the money manager's hand into maybe not being so aggressively short the grain markets. And honestly, we've seen some of that already. The funds are, I would say, aggressively long the corn market. They don't have much of a short in the soybean market. I think the wheat market's kind of the short leg of the spread. But a reinflation event could be a good thing for the grain markets and maybe for you guys. I know that during the inflation of 21 and into 22, farmers made a lot of money during that time frame. The problem, of course, is that when you have inflation, things like inputs and rents and all that, they go up and they don't come back down till 2 or 3 years later, where commodity prices come down very quickly. So it does present a set of problems, but maybe this is your best chance for like sharply higher grain prices, because I don't know that I see much else right now. I don't know. Again, accuse me of chart crime, if you will, but that's how it looks. I didn't like. It's not magic. I didn't make this up. I mean, that's how it looks on the chart. So
USDA's Argentina office is optimistic about crop potential. The forecast for this season's soybean crop is steady with the previous estimate of 52 million metric tons. The unchanged projection is attributed to an increase in soybean acres as well as ideal growing conditions with ample rainfall. However, dry conditions caused by La Nina could impact yields. Argentina's soybean crush is expected to reach a record high of 42 million metric tons, fueled by strong exports and a consistent crush rate.
I think reading between the lines, what I'm seeing is they're saying it's too early for us to make any revision based on the dryness that is out there. Bloomberg had something yesterday indicating La Nina is going to be a problem. And they interviewed, I think, some farmers down there that said, hey, this is a problematic deal for us. So I don't know. The weather forecast is a mixed bag. They're going to be dry in a lot of Argentina and into southern Brazil for 10 days. And then you've got some scattered rains that return in the 10 to 16 day period, but it still doesn't look great to me at all. Looking at the 15 to 28 day, which is, again, extended, probably unreliable. You've got more normal rainfall expected in Argentina. So I still think that the market may be holding some weather premium, or perhaps adding some weather premium in soybeans, yesterday into today because of this. Maybe this is the reason that the soybean market is unable to sell off for the time being. I threw some supply and demand type stuff in here. So Brazil and Argentina combined are 52% of global soybean production. Brazil is going to be about 40% this year. Argentina is going to be about 12%. So, Argentina could certainly afford to lose some bushels without turning this into like a big bull market. But when there's uncertainty, as there is now, the market may hold some premium. World soybean ending stocks still projected to be record high, and Argentina, southern Brazil could probably afford to lose some, and you'd still be at record high world ending stocks. I threw this in. China soybean ending stocks are projected to be record high, and there you could talk a lot about this just as it relates to import demand. Like, hey, if we get into a trade war, can they afford to avoid U.S. soybeans for a little bit? And maybe the answer is yes, because they've got a lot of soybeans on hand, if you're to believe the numbers that USDA has out of China, and a lot of people don't.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
My intention for a little bit now has been to get back to some of these shorter, like 5 to 15-minute videos regarding grain marketing. And I did that yesterday. 2025 corn marketing thoughts and strategies. I ran through what I've advised to this point, what my game plan is moving forward. And I ran through 3 very basic and simple option strategies that you guys might want to consider. I'm not recommending any of that stuff necessarily. I stick to cash sales mainly. But for those of you guys who are worried about downside of the market, your risk profile is very high, maybe those are things to consider. I take a very simple approach to this. I think that's the same approach that you guys should take if you're looking for some help or guidance, or just some different thoughts with regard to your grain marketing. You should check out this video. Go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. I think that hearing some advice or commentary on grain marketing from an unbiased third party could be a good thing for a lot of you guys. So give that deal a shot, and I will forward you a copy of this morning's email.
U.S. farmer sentiment declined slightly last month, but farmers are still hopeful for the future. Purdue University CME Group Ag Economy Barometer Index fell to 136 in December, a 9-point decline from November. Excluding last month, the index remains at its highest level since August 2021. The slight decline in sentiment was driven by farmers' concerns about the conditions on their farms and in the ag industry. However, farmers remain highly optimistic about the future following the presidential election. The potential for a possible trade war under the Trump administration is a rising concern. 48% of respondents believe a trade war is either likely or very likely, up from 42% in November.
I admittedly didn't read through this. I don't understand how farmer sentiment is better now than it was in 2022 when corn was like $7 a bushel. I don't comprehend. Right. Did you read through any of this? I
read through it. It all seems a little bit far-fetched, though, even when you read through it versus, the news and the headlines and everything that farmers are dealing with when it comes to the markets. When you read through it, you would think the farmers are doing pretty okay.
There's got to be like a secret sauce that they use in here to adjust these numbers. Maybe they're seasonally adjusted. I don't know how they're adjusted. Just that it just doesn't line up to me. You would think that a chart like this would kind of line up with like a grain price chart almost, because that's really what drives sentiment more than anything. It's just profitability.
For certain.
I don't know. I feel like if I ran a survey of farmer sentiment and I did our subscriber base, it would look drastically different than this.
Oh, yes.
I don't know.
Definitely. U.S. ethanol exports spiked in November. Exports climbed to 187.6 million gallons, a 31% increase from October. Through November 2024, exports totaled 1.72 billion gallons, exceeding the prior annual record of 1.67 billion gallons set in 2018. Exports are on track to reach 1.9 billion gallons for the entire 2024 calendar year. If achieved, this would account for 12% 10% of U.S. ethanol production and also set a new record. The rise in exports is due to substantial growth in major markets such as Canada, India, and the European Union. The doubling of undenatured fuel sales also contributed to the surge. Exports of dried distillers grains fell by 15% in November, but were still 14% higher than the same time period last year.
You remember when we were talking about the first version of the CR that came out, and they wanted to do year-round nationwide
Yes.
E15. So I asked Pete about that, and my comment was, I think when they said that, I said, you know what, we could probably go to nationwide year-round E15 and not actually increase ethanol usage because we'd probably just export less. And Pete was like, yeah, you nailed it on that, because in the rare times I was right about something. But I think that's what would happen. Like, you could get into a situation where maybe you eventually do get to a year-round nationwide E15, and it doesn't really move the needle with regard to ethanol demand, because you could just lose exports is what you could do. I still have a lot of hope for 45Z, and that we end up using a whole bunch of corn ethanol for airplanes. I hope that happens, but we're still waiting on guidance, of course.
Inari Agriculture saw its valuation surge in 2024. The agtech startup raised $144 million in new funding since January 2023. The additional equity raised the company's valuation by 32% to $2.17 billion. Founded in 2016, Inari develops wheat, corn, and soybeans that require less fertilizer, water, and land. The additional equity will enable the company to expand and provide sustainable solutions for farmers. And I need to rephrase that. That was since January 2024. It's in the last year that they raised that funding.
I don't know anything about this company, but I threw it in because I thought it was interesting that somebody was throwing big bucks into ag right now, because I don't know that it's necessarily the best time to throw big bucks into ag right now. I just don't know that the farmer appetite for this sort of thing, assuming it's more expensive, is out there. But maybe there's some phenomenal ROI associated with it, and we'll find that out. I don't know. Interesting though.
USDA reported a flash sale of corn on Tuesday. U.S. exporters sold 4 million bushels of corn to Colombia for delivery during the current marketing year. Accumulated corn sales are up 30% compared to the same period last year.
U.S. corn's still competitive, but Brazil is creeping up on us. And a lot of that relationship will have to do with Brazil's second corn crop, which is the big export crop, which is planted after soybeans. And we don't know much about that yet. There are some questions about acreage, I think. What did cattle do yesterday?
Cattle futures were higher once again. Live cattle saw gains ranging from 37 cents to $1.02. Feeders were $1.80 to $2.37 higher. Box beef was mixed yesterday. Choice ended the day at $325.79. That was down $1.31. Select ended the day at $305.43. That was up $2.10.
And the cash cattle market is just absolutely on fire.
Oh, on fire. And we're going to see higher bids again this week.
Did you see the headline yesterday that there's a date now on the Mexican feeder cattle imports?
I did not see that. Is that January 20th?
I believe that was the date. Maybe that was out before, but
yeah, and we knew it was coming.
Okay, so that is going to resume. Outside markets this morning, U.S. dollar is up and up sharply. Stock market is down just a little bit. The S&P is down 13. The Dow's down 60. Bonds are off a little bit. Crude oil's up 5 cents in the March WTI at 73.62. Have a great day, guys. We'll be back on Thursday.